Okay, good morning. 24th of May, London opening. And we're seeing a revival, of course, in the US dollar. That's the talk at the moment, really, just grinding up higher. And as I'm sure you've all seen, we've just had the Moody realignment of China's rating from A to AA3, which basically is a downgrade of one notch, which has affected the commodity currencies, the Australian. It did affect the New Zealand as well, but we've had some trade balance numbers out in New Zealand, which have turned out to be quite good. So the New Zealand, you can see here on the strength meter chart, is putting on a reasonable show of strength at the moment. So despite the China downgrade, the trade balance has affected this to the positive side. This is I was looking at the screens here for a couple of hours now this morning. It's been really sort of a mixed bag of what a trade, and it's one of these cases where you don't want to be forcing trades. I've been saying for the last few days now that this dollar, I'm not totally convinced with the dollar rally. And of course, you had the Fed statements overnight from the likes of Hawker and so forth, still trying to underline the fact that you're still going to have two hikes for the rest of the year. The chances are now of a hike in June is now back up at 80%, having been down back at 60%. So it's at the high end. So 80%, I think you can pretty much is a gimme. And the potential for a second hike is, I think, still languishing around the 60%. Nice spring shirt. Yes, thank you very much. Thank you. It's part of my spring range. It's not spring actually; it's summer here now, I think, isn't it? So that's basically where we are. In terms of the US dollar. US dollar is sort of having some realignment. What we're definitely seeing at the moment across all markets really is a risk to back on in the market. So there's a risk appetite sort of seems to be emerging again. If you look at the stock market, it's had four days now of growth since the fallout from last week when Trump revelation started hitting the wires. And so the stock markets are up, gold markets are pushing lower, the bond markets are pushing lower, which means the yields are pushing up, which means consequently the dollar is pushing up. And you can't fight that at the moment. It's not something that it's sometimes you get torn between the fundamentals and technicals. You've got to go with what I'm a technical trader, so I've got to go with what the technicals are saying. Although the fundamentals, I think in this case, I think you're going to see once Trump gets back in next week and back to the day job, and all the revelations start coming out again, you can find dollar under pressure. There's not been great numbers coming out of the US over the last quarter. They've not got such great numbers. Okay, we had a good non-farm payroll, but PMIs have been missing targets. So there's every reason for the dollar to be down at these levels. But at the moment, it's turning its course, and we're seeing maybe some profit taking. Like maybe there's been some big sort of bank positioning, shorting dollar. There's certainly been positioning in getting a long euro recently, and that looks as though it's having a bit of profit taking in the euro dollar. So let's look where we are. As I say, I can't fight it. Thanks, Potter. I wouldn't say that. For you would know what this is. This is a Primark shirt. It's not the best outlet. But when I go to, I have a holiday home in Asia, and when I go there, I don't normally like to do washing, so I just buy a whole bunch of shirts and just don't wash them. I just throw them away. But somehow this few of these got left back in my travel bag back. So I don't. Yeah, right, okay. Yeah, I don't normally wash them. I just normally wear them a couple of days in Asia and then throw them away, or leave them for the maid. So let's have a look at dollar yen. So you can't fight it. I have not been selling into the strength. Waiting for it to show its hand. Let's just go before I go to there. Let's just pull back to the strength. What you're seeing is weakness in the Japanese yen across the board, really. So the dollar is pretty sort of indifferent. across the strength of the chart. It's the 1 hour sort of edging lower now as in the last hour or so, but the primary areas we look at the moment: the Japanese yen weakness and New Zealand dollar strength, and dollar's doing what it's doing. So let's have a look at dollar yen. I just want to drill this back out to. So we've had this as a sell zone in dollar yen, which is basically the 50% pullback from the highs from up here down to the lows of 110. So 110.20. So this was like an area of I expect the market to stall. In fact, it has stalled here. Looking here with this candle here, 112.05. No big shock horrors there coming into the round number. But you've got to go with the flow, and the flow at the moment is yen weakness. So looking for entry in dollar yen, coming in around the 11.65 area. Okay, now the ATR on the 4 hour, I'm not actually trading the 4 hour, trading on the 1 hour. So the ATR on the 1 hour is coming in around the 14 pips, and I like a factor pullback of 1.5 to 2 ATRs on that, so 20 pip pullback from the highs for a continuation of that takes you back into 11 basically 75. It's only about 10 pips away. 11.70. There you go. 11.75. I had that in this morning. So 11.75 is a potential buy zone if you want to get into dollar yen. Full disclosure, I'm not. I'm in enough trades at the moment, and I'm in enough yen trades as well. So I'm just leaving away from that. I'm going to touch on my trades in a moment. But then you've got the support area coming in below here as well. So if you were to take dollar yen strength, dollar yen at 11.75. You can have a 2 ATR stop, gives you a 30 pip stop, takes you below this little swing low, this area of indecision, below this recent high as well, a 30 pip stop for a continuation up into up to 12.50. As I say, not convinced by it, but it is doing what it's doing, and you've got to go with the flow if you're a technical trader. The bias is now to start getting long dollar against the weaker currency, the yen. Okay, let's have a look at let's have a look at the euro dollar. Now the euro dollar, the jury's out on this one. I've had 2 buy zones penciled in. I've had the conservative buy zone. We've pushed straight through there. Didn't cost me any money. I wasn't in on the trade, and my trades because I display them. And the new buy zone coming in, I think this is a key level of support. So whilst you might want to be inclined to sell this at the moment, for us to get below 11.50, I think that's when you are going to see the tree being shook and some stops being hit, because there's definitely going to be some support coming in here. Anything below here, I think you will definitely see stops. So if we do break through the 11.60 to 11.50 area, which is my initial support, then stops down to the 11.6, 11.15, 11 even area is pretty much, I think, it's going to be plain sailing. So do be mindful of this area. 11.50, I think, now is becoming a key area in here. Now, if you believe that in the fundamentals, and better numbers coming out of Europe than they are coming out of the US, and the taper talk and the normalisation of interest rates in the eurozone looking more sort of on the cards these days, and indecision about the US. Are they going to move it twice or once or none at all? Remember last year they penciled in 4 hikes and only moved it once. So as you see, the fundamentals taking shape, the euro could easily be a lot higher than this and trade up to certainly up to the 115. One thing is for sure is parity is off the cards. So the bias is certainly to the upside in this. But as I say, I'm not necessarily trading the fundamentals. I'll leave that for Tony. He's back next week. For me, I'm trading the technicals, and at the moment, I can't. I'll be a nervous buyer here because of this level. It's a support, but there's some longs out there. There's some euro longs, especially this is the most actively traded currency pair around. So you can rest assured there are going to be stops in here. All the retail traders will be looking at this. And if the retail traders are looking at it, the banks are looking at what the retail traders are looking at. So we'll see it push back down. They might get some cheap stock on board around the 11 area. Okay, that's the euro dollar. Now I've just taken a trade idea, so we'll touch on that while we're on the US dollar, and then we'll have a quick span around what else is going on. And we are in the pound. We're in cable. Okay, so it's just basically exactly where I am at the moment in here. So I've just taken a short trade. I'm looking at the strength meter in particular. I'm looking at pound weakness. Okay, again across all time frames, it's just it's a smidge higher on the 1 hour, but it's weakness and dollar strength. So cable is my play. When we had this move, this big sort of inverted hammer candle from yesterday. Now this basically happened coming into the London fix, and there's some screwing up of London positions, and from what I understand from the banks is that there was a very thin liquidity in the British pound. It could have been in the wake of the atrocity in Manchester, the despicable acts of terrorism up there. So there's a possibility that there's low liquidity in the British pound, from what I understand, and that basically led to this big move. We had a 60-point move, I think it was, on this pound from it's a 60 pip move on an ATR that's on a 1 hour ATR that was basically around the 20 level at the time. So it was a big move on the 1 hour. But what we did see is the point that I take from here is that there was anything above 130 level just saw some big sellers coming in. There's been sellers up there for pretty much since the election announcement was called a few weeks ago, and I think any move above 130 ahead of the election, there will be we'll see some sellers coming in. So on a risk reward basis, I've got a 30 pip, well, actually got a 40 pip stop on it. Takes me up to 130.10. Okay, so I'm expecting sellers to come in. Maybe that stops it a little bit too close. Maybe you want to have a 60 pip stop and an 80 pip take profit target. But it is what it is. I put in a 40 pip stop, and I position size accordingly on the back of that. So I'm leaving it there. So I'm looking for the continuation of this downward momentum, this downward trend line. Okay, we've had a pullback today from the lows, failed to break session highs from Asia. And I think this is a reasonable trend to get in on the downside if the dollar is to continue its grinding higher. Now also we had some announcements over the weekend in terms of British government's manifesto, which wasn't conceived very well by the opinion polls and put the lead down to cut it in half actually. Which is still pretty much a gimme that the Conservatives will come back in with an increased majority, but it still puts risk into the market, certainly risk into sterling. And of course you've got the risk of Minister Davis is also talking about pulling out of the Brexit talks altogether. So if they don't budge on their 100 billion demand exit bill. So there's nervousness in the pound. So risk reward basis, I like that on that. So you take that at your own risk. 130.39. Missed your sell by a few pips. Oh, what a shame. Okay. Well, we had sellers certainly around that level. So yep, we think we like that trade because of the risk reward. My stop is 40 pips, and I say my take profit target is back down here. At near the 129 area. There's a school of thought that the market really hasn't priced in too much the Brexit risks at the moment. Remember when the announcement of the referendum, we were trading at 150. Let's just pull up the longer term chart while I'm waffling on about this. So this is the Brexit candle, which I've neatly put in on the weekly. I forgot about this. This is the Brexit candle. 150. Moved that down to 120. Okay, so it's only it's only it's not far off from a complete from a 50% retracement of this. So let's just put up a fib tool on here. So Brexit comes in here. Yeah, we've made a good move back up. The 38 retracement level on the fib comes in at 131, basically 132, call it. And 135. Big, not a big move. $5. To a 50% pullback of the entire Brexit candle, which is, let's put the jitters under the under the cable. So it's had a big pullback with cable, and at some point there's going to be some concerns coming in there as we get into the negotiations. My trade for the beach this year is to buy pound. I think I've been saying, you should be buying the 129. Been saying that since 120. You should be buying the 129 call options, a leap call option, which is a long-term equity, long-term option, and go and sit on a beach. So I do think this could be the currency of the year. But at the moment, there's going to be some nervousness coming in. So anyway, that's my rant on the pound dollar. It's worth certainly a 5-minute rant, seeing as I put the trade idea out. So you've got to know my line of thinking on it as well in terms of technicals and fundamentals. Okay, let's just have a quick span around. While we're on pound, let me just drag you out to the euro pound. Now, the euro pound, this is something you might want to look at as well. Okay, so the euro pound is now this is profit taking. This is profit taking in the euro. This moved back down. Okay, was a good run up in the euro ahead of the French elections. There's an initial pullback after the result with profit taking. Now the fundamentals are kicking back into the euro, and the euro is pushing up higher, as we mentioned at the beginning of the stream, with the normalisation of rates and so forth. The euro over the pound again is something I think you want to be looking at. So we're getting back into a new buy zone. This buy zone here is a very thin line, which is basically the sort of like an aggressive entry. Wasn't totally committed, but as we approach the 86 handle now, could find some support coming in here. I think you'll find some buyers coming into euro pound at 86, so we're only a few pips away from there at the moment. Thanks, Pod. I'll read that later. So this is I think is a risk reward again that you can consider taking. It's pretty clear where you want to take your stops. If you take this trade, you take this level of support, 50 pip stop, back up to 87. Gives you a good risk reward on here as well. So you're definitely wrong on this pair if you're 50 pips. If you get stopped out with a 50 pip stop, you're wrong. So I'll look at this zone as we come into the 86 handle. This could find support. You might want to take a long trade in here if you believe in the continuation theory and buying into pullbacks. This is, look at here, it's a nice move up, good pullback into structure, off it takes again, another pullback here into structure, up it goes, another pullback into structure. Now this is a good pullback into very decent structure, 86. So keep an eye on euro pound. Keep an eye on euro pound for that. Okay, let's just span around some of my trades. Euro yen, still in this little puppy. Okay, it's been meandering around negative. I mean, I've been quite lucky on this trade, really, looking at it. I mean, as I said yesterday, so I was in one trade yesterday, and someone was, it's a different time zone, so he might not be online at the moment. It doesn't matter if he is or not, because we remain anonymous. But we were in a trade, I think we were in the Aussie yen trade, and because it was approaching the stop loss level, he was panicking, saying, "Shall I get out now? Should we get out?" As it was moving sort of down south, and it was about 20 pips in profit at one point, and then sort of 30 pips offside, and panic stations. Well, the point was, you've got to stop in place, forget about it. stops in place. I know my risk. It's either going to hit my stop or take my profit out. So I'm not going to get freaked out, panicked out by it. Just as well, because I've almost hit my stop on this one 1, 2, 3, 4 times, the euro yen, but it's fighting my cause, and we are continuing. Now this of course clearly is the yen weakness. Now if we had the euro strength working for me as well, we would have been taking out profits, but with the flight to risk on the market, yen's been knocked back, and this pair is sort of not, it's languishing. It's drifting high on the yen weakness, but it's not drifting high on the back of euro strength. So I want to see some euro strength come back in for this to start paying dividends. So that's where I am. Where are you now? If you're not in the trade, you still play yen weakness. If you want to play the euro strength, then you can get back in here. I don't mind my buy entry. That's why I'm not moving stops to break even. My buy entry back down at 124.84, which is about 30 pips away. Or you can take. Let's have a look here. Yeah, I mean I think that's one of your best entries there. You might come in at 124 if you want to take a more of an aggressive entry. 124 with a calculated stop loss. 45 pips, the position size accordingly for continuation of the yen weakness. Euro is not. There's not Armageddon for euro. It's not running for the doors in the euro. We are just seeing some profit taking. So the fundamentals behind the euro. Look at the PMI numbers out yesterday. I mean the markets didn't really react too favourably to them, but the euro numbers yesterday were were quite solid numbers. You pull them up. I won't go through them now, but they were quite solid numbers across the board there, and so the euro, is not a currency under pressure. It's just seeing some profit taking. Johi is speaking later today, I believe, as well. So do be mindful of that. I think he's speaking at when he's speaking. Speaking at 1:45 today. I stream at lunchtimes. I'll be streaming at 1 o'clock today, as usual, during the midday session for the Europeans and for the morning guys in the US. So I stream 3 times a day now, as you know. So we do the lunchtime, we do morning, lunchtime, and evening. And you can always play me back as well if you're so inclined. So anyway, yeah, Johi speaking. So be mindful of that at 1:45. But back on track. Euro still, potentially could push higher. You want to see the profit taking shaken out. And yen continues to be the weaker trade. Right, what do we do now? I'm long Aussie yen as well, which is right. So I'm long Aussie yen. Okay, now this again, Aussie weakness overnight because of the alignment of China's Moody rating that affects the commodity currencies. So Aussie has been under pressure. The Aussie I think should be under considerably more pressure in terms of the RBA last couple of weeks ago announcing, or not announcing, but stating that they are they're concerned about the global commodity prices and what have you. Iron ore, copper prices under pressure again on the back of China realignment and potential slowdown in growth, slowing down to 5%. Gosh, wouldn't Trump love 5% growth? But Aussie, it's still a pressurized currency, which is why this pair is not moving in the direction that we had initially thought. So, still in the trade. Theory could be, why don't you get out of it? I'm in. It can go either way. I've got a profit target higher than my loss target. Yen's still looking weak. I'm relying on the yen weakness really, risk on to pay, for this to pay out for me. Whether I would be saying you should be getting back into these trades at the moment, Aussie yen, let's be honest. I mean, I'm pretty indifferent about it at the moment. I'll be totally honest. There's no real reason to commit either side on this. I mean, of course, the trend is still to the upside. If you follow the trend, then it's still trending up. We like to see us take out yesterday's highs I mean, you took out yesterday's highs earlier for a moment, and then this blip down on the back of the China realignment here. This is the candle here for that. But we're pushing back. I don't know. We'll see. And I'm well, as it is, I'm leaving exactly where it is. I'm leaving the trade on. Whether I'll be taking more trades if I didn't have this trade, possibly not. But I'm not getting too freaked out by this. My stop loss is not too. I've got a 40 pip stop loss at a 60 pip, so it's it's risk rewards in my favour, but not massively. So, and the trend's up. So edges on my side. Flip a coin, better than flipping a coin. So we'll stick with that one. Okay, that's the Aussie yen. And what else am I in? I'm also in the Euro-Oz. I think I've discussed that. Euro-Oz, long Euro-Oz as well. Yeah, keeping there. Right, now what I want to look at really is two things. First of all, I want to look at the CAD against the US dollar. Now, we've been talking CAD up against the US dollar. Didn't get the trade off yesterday on yesterday morning stream for those of you who joined me. It did move nicely into profit, but now it's back up into, would have been a loss, but we didn't get the trade away, and I aborted that trade in terms of the trade pending order into the day. Sorry, not day. I want to go to the hour. Okay, we are, still aligning ourselves for CAD strength on the back of high oil prices. Border tax talk is sort of diminishing. NAFTA talk is sort of off the cards. Of course, wait until Trump gets back to work next week, back to the office, back to the day job. We'll see if he starts attacking Canada again. But at the moment, Canada is being dragged up on the back of oil prices. Pretty much the consensus is that 9 months production cuts will continue. Algerian minister was talking yesterday about possibly extending out cuts to the whole of 2018, which basically accounts to 18 months worth of production cuts. We'll see how it goes. That's all out tomorrow, so that's the market's going to be keenly awaiting that. And of course, Canada have got the Bank of Canada this afternoon as well. So chances are you mostly don't want to touch the Bank of Canada at the moment. Touch the Canadian dollar at the moment. So I think all bets are off the table now in terms of Canadian dollar for me at the moment. Just too much high impact stuff coming out, and there is high impact stuff, over the next 24 hours or so. So although we had the CAD trade on yesterday, or CAD trade idea on yesterday, I'm putting that one from my thought process at the moment, while the CAD does what it has to do on the back of oil prices. Right, let's look at what we're seeing here in terms of New Zealand strength over the Japanese yen. And then we will have a quick look at some trade ideas. So New Zealand yen, okay, this is a perfect V-shaped trade over the 1 hour. Typical, you bring it up and it comes straight back into the level of previous high, which takes you back from the 15th of May. Okay, are we going to make back this candle here? This is the question. Are we going to hit the 79.50 area? Basically the peak of this move to the upside. Bit of uncertainty. Commodity prices. We had the fallout again, of course, with Trump protectionism, but we've had a substantial move up here at the moment. So we've now come back into this level of previous resistance, so it could hold it here. However, if it doesn't hold, bias is continuing to trade this to the upside. New Zealand is looking strong. Some really, really strong trade balance numbers out of New Zealand overnight, which has really put some bid under the New Zealand currency. Now, when you see a currency working strong in its own right and you see a currency weak in its own right, then that gives you double power. That's why we trade the strength over weakness. That's why we trade the momentum meter. And that's what you're seeing here at the moment. This move has been coupled with not just yen weakness or New Zealand strength. It's been coupled with both, which is why I like this move. So we need to break this high before you start getting into it. But if you break 78.50 and comes back down to retest that level, that's where I look to get into it. So I'm not going to be buying. It's just not my nature to buy into that. But what I want to see happen here is for this to break through. The breakout traders come back to retest and then take off. That's where I'm looking to enter this trade. Okay, so it's a retest of this level. So if it doesn't break through, then you have to look for an opportunity to get back in at the lower levels and getting back in around the 78 handle. 78.07 was this trigger here, but you can get back in 78 handle to give you the risk reward for a retest. So I'm not buying here. Happy to buy pullbacks. Obviously, the decent pullback would be 77.70. Let's take this. Let's take a fib 50 level. Okay, 50 level. Sorry, 77.70 level would be a fib level, which would be the 23. I've done that fib tool down the wrong way, but it's a 23.6 fib level. But the important level 77.50. So it's longer term. You've got to be patient to sit for there. You might want to get onto this train now before it does take off. So wait for the breakout, pull back, and then continue that to the upside. But New Zealand at the moment is strong. New Zealand US dollar. Okay, so the US dollar is pushing on some strength as well. So New Zealand and US dollar are both strong at the moment. I think Nick put something on the chat room earlier, which I just saw. New Zealand short. New Zealand US dollar short would have worked nicely on the back of the China realignment, but the trade balance is affecting this. But we failed to make break these Asian highs. Let's drill out to the 4 hour. Let's come into this key level again, same as the yen. 75.50. So as long as we stay below 75.50, could see this pull back down if the dollar continues on its strength. Remember, you need dollar to push up on this one. You can't rely on New Zealand weakness. I think you need to rely on dollar strength for this to come back and come back to the 69 area. And okay, let's have a look at the trade idea for Nick. We're coming in. This is steady capture, so coming in at 68.60 for take profit, and there's a couple of short entries on the way up. Okay, could very well come back down. Let's hope it does. So 68.60 takes you back into around this level here. Okay, as I say, I think you need dollar strength for this to pay out. I can't necessarily see the New Zealand collapsing at this moment in time, but it could work. We haven't taken out these highs, so this is working for you fundamentally. If you take out the 70, 50 area, then of course you have to consider whether that trade is going to pan out. Right, let's have a look. Anything in the chat going on? Are you still selling? Well, not selling pound yen. I am still short pound yen. Dr. Pepper. I'm not still selling it. I'm in that trade, and that is costing me. So I am short here, and I am 40 pips or so from. I mean, this is not. I certainly wouldn't be on this trade now, but I'm not going to start bailing out just for the sake of it now. It will do what it's got to do. I've seen the highs and I've seen the lows, pretty much like Nixon, so I'll let it do what it's got to do. But I'm still short this, so I wouldn't be necessarily taking this short at the moment because the yen's so weak. So I'll just let this pan out. They're both weak, so it's either one of them is going to win the show. I like to enter trades on strength over weakness. These are both weaker currencies at the moment, so I wouldn't be entering this trade at the moment. But it could go either way, and I don't know which way it's going to go. So I'm in it, but wouldn't be trading this one at the moment for re-entry. It's just too indifferent, too choppy, too weak in general for both. So I'm leaving that one to do what it's got to do. But thanks for bringing that up. Right. Still buying euro yen. Yep, I think I discussed the euro yen, Glenn. Euro yen is still a trade you can consider to the upside. Okay, and I'm long there, just on its way up. As I said a moment ago, Glenn, you can play it back. I almost got stopped out 3 or 4 times, but I'm still along that euro yen. Trade ideas. Let's see what's going on there. This is for me. This is the pound. This is the cable short, and you know about that cable short. Happy with the cable short. We discussed that in detail, so no need to bang on about that anymore. We looked at Nick's steady captures and Mad Max. This is must be a bit out of date now, so we've been a little bit lax in some trade ideas. So let's get some trade ideas coming in. No trade idea is a bad idea, as we know. Let it run, Mad Max, as we do, and we are shorting Aussie Swiss. Yep, I like that trade. Shorting Aussie Swiss. Swiss the Swiss is sort of bang in the middle there on the 4 hour. Strong if you like on the others. Just dip below on the 4 hour. You can see the red one here, but above on all the others. Second strongest currency up there with the euro on the daily. So sometimes it's a good time to get a general perspective of what the broader picture is looking like. Drill it out to the daily, so you can just see here. It just tells you the strong currencies in the basket. Euro strong. I mean, this is still putting the US dollar, the weaker currency, out of the basket, and rightly so. But it's pushing up in the last day trading session. Right, guys. I will leave it there. I'll be back on at 1 o'clock, so do come and join me if you're around, and if you're not, then I'll see you in the morning, depending on, of course, where you are. If you're in Australia, then of course it's sometimes it's 1 o'clock is at 9 p.m. your time, so that should be okay. No, 10 o'clock p.m. But I'll be doing the morning opening again, and I'll be doing the London wrap this evening as well. So trade safe. Jahi speaking later. We've also got this evening. We've got FOMC statements as well. So Dollar might be looking for that for guidance. It's great having the the Fed speakers speaking sort of periodically throughout the week, but the Fed statement will be pretty important this evening as well to see if we are justified in our 80% probability of a June hike, and we'll see if that has any effect on the September potential hike moving from the 60%. So the FOMC statement tonight, so be on your guard for that. As we said, Bank of Canada this afternoon, and Drahi speaking at 1:45. So you're all prepared, all set up for the day. Trade safe, keep the trade ideas coming, keep the chat coming. I'll speak to you real soon.